Hello and a very warm good morning. You're tuned into Market Cafe. I'm Ankita Saxena and with me is Shrishti Sharma. In the next half an hour, we'll take you through all that transpired in the global front, how the Wall Street moved, how the global markets moved, what happened on the geopolitics, and the cues you need to watch out before the start of the street. Now, let's take stock of how the Wall Street shaped up yesterday and what really happened as far as US and Iran war is concerned. When on the latest development is the fact that there were fires exchanged at the Strait of Hormuz by both US and Iran, with both blaming that the other party started the fire. But, Donald Trump came out and said that the US-Iran ceasefire still holds water, though they will be trying, to open the Strait of Hormuz. But Iran had a different story to tell. They said that they will not be opening the Strait of Hormuz passageway with an unrealistic plan from the US. Well, we did see oil prices jump up on the back of that, and on the back of that, we did see S&P 500 and Nasdaq Composite retreat from their record high levels. S&P 500 shut shop 0.3% lower, Nasdaq slipped 0.1%, and Dow Jones lost almost 300 points, closing shop, more than with cuts of more than 0.5%, more than 0.6% actually. That's coming in on Dow Jones Industrial Average. And today we are waiting a very important macro data that will be coming out from the US markets. We do see the April unemployment rate and the payrolls data. Dow Jones is showing that the economists are expecting the jobs gain to settle in at 55,000 last month, and they anticipate the US jobless rate will hold steady at 4.3%. But besides that, for the week also, if we see strong tech earnings that have really boosted Nasdaq, and Nasdaq is on pace to climb 2.8% for the week. S&P 500 is on track to rise 1.5%, while Dow Jones has lagged for the week with cuts of 0.2%. So that's how really the week has shaped up for Wall Street. But let's take a commodity check from Shrishti.
Well, absolutely, and that's the biggest worry yet again, Ankita, for the equity markets as well, because oil has once again rebounded from those lower levels. And just yesterday, when we have one point in time seen Brent crude hovering around that $97 per barrel mark, we have seen that recovery happening on Brent oil just yesterday, and even today as well. It is very well above that $100 per barrel mark. So what happens on the war front is something that is critical to watch, as the 48-hour of deadline will be over just today, and how does Iran respond to that is the most important thing. But other than that, we have seen good jump or retracement coming in from on silver as well as gold prices, because gold is now very well above that $4,700 per ounce mark. As of now, it's $4,731 per ounce mark, while even for silver, that is above $80 per ounce mark, and holding on to the gains of 0.3%. So all in all, the precious basket is gaining. But yes, the crude oil, what happens next is the most critical factor for the markets.
All right, so that's how the commodity is moving in. And on the back of that, we do see Wall Street trading with cuts, on the back of that jump up coming in oil prices. And Asian markets as of now are also trading in the red. Nikkei is trading down 0.6%, 400 points cut coming in on the Nikkei. Hang Seng is down almost 1%. Shanghai is trading down very, very marginal moves coming in on Shanghai, just down 0.1%. And S&P ASX 200 is trading down with cuts of 1.5%. Implied start to Nifty also indicating to a gap down start of almost 100 points at the start of Friday morning.
All right, so that's about the Asian check. But let's move on and let's take stock of the other big global stories that we are tracking at this hour. And first up, the fragile ceasefire between the US and Iran came under fresh strain after both sides exchanged fire in and around the Strait of Hormuz. Now, Iran accused of US of violating the ceasefire by striking targets near the strait, while US Central Command and American forces responded only after unprovoked Iranian missiles, drone and small boats attack on Navy destroyers. Now, Trump insisted the ceasefire remains in effect, saying negotiations with Tehran are still progressing despite the latest flare-up.
And well, on the macro front, the US labor market continues to show remarkable resilience despite rising geopolitical tensions and volatility in the energy markets. Fresh data from the Labor Department showed weekly jobless claims rising only marginally to 2 lakh, lower than what the street was penciling in. We were penciling in 2,05,000. Continuing, the claims also came in better than expected at 1.7 million. while the 4-week moving average held near historically low levels at 2,03,250. The number suggests that the layoffs remain limited and the broader jobs market continue to stay stable. And we also spoke to Mark Chandler from Bannockburn Capital Markets on impact of war and trade cuts for the Western countries. Let's take a look at that.
In fact, I sort of joke with my friends that the pessimist inside me says that things can't get worse, but the optimist in me says they can. But I think that we're at a point now where where it seems clear that the U.S. kicked a hornet's nest. It wasn't prepared for it. It wasn't even though it was told about what the Iranians could do, it didn't really believe it. And so once again, we've stumbled. You call it a West Asian crisis. I think of it as a war. Iran is the 7th or 8th country the U.S. has bombed since early last year. But I think that the market's at a point now where people had been talking about $150 a barrel oil prices or higher, and I think that was overdone.
All right, let's move on and let's talk about Boeing because Trump is expected to be accompanied by top American corporate leaders, including Boeing and Citi CEOs, during his upcoming visit to China next week. Now, the president is scheduled to meet Xi Jinping in Beijing on May 14th and 15th, with trade, investments and industrial cooperation expected to dominate the discussions. Now, the visit comes amid expectations that Boeing could secure a major aircraft order from Chinese airlines, potentially ending a near-decade-long drought in large Chinese purchases of Boeing jets.
And Shell CEO Wael Sawan has warned that the global oil market is facing a supply shortage of nearly 1 billion barrels due to the ongoing Iran conflict and disruptions in the Hormuz. Now, Sawan said that the supply hole is deepening every single day as crude production and exports remain blocked. Oil executives across the industry, including leaders at the Chevron and Exxon, have cautioned that restoring oil flows could take weeks or even months, even if the conflict ends soon.
And Airbnb and Expedia Group have warned that the ongoing conflict is hurting the global travel demand as geopolitical uncertainties continue to disrupt the routes and trigger cancellations. Now, both companies reported better than expected first quarter revenue, but flagged weaker booking trends and softer outlooks amid airspace closure and traveler caution linked to Iran conflict.
And Japan's inflation-adjusted wages rose for a third consecutive month in March, supporting the case for further interest rate hikes by the Bank of Japan, despite raising geopolitical uncertainty. Real wages increased 1% on a year-on-year basis, slowing from a revised 2% gain in February, but marking the first 3-month stretch of wage growth since 2021.
And OpenAI has rolled out a specialized version of its latest AI model designed for vetted cybersecurity teams, intensify competition with rival Anthropic in the fast-growing AI security space. Now, the launch comes just a month after Anthropic introduced Cloud Mythos Preview, a cybersecurity-focused AI model that drew attention from Wall Street and senior U.S. government officials.
And Cloudflare shares plunged nearly 18% in after-hours trade, despite better-than-expected quarterly results after the company announced plans to cut more than 1,100 employees, or roughly 20% of its workforce. CEO Matthew Prince said that the rise of agentic AI has fundamentally changed how the company operates, with certain roles no longer needed in the future of AI-first model.
And CoreWeave shares fell nearly 10% in extended trade after the AI infrastructure company issued weaker than expected Q2 revenue guidance and raised its capital expenditure outlook for 2026. Nvidia also increased its stake during the quarter, buying an additional $2 billion worth of CoreWeave shares.
And shares of Novo Nordisk and Eli Lilly gained after early prescription trends showed strong demand of the new oral weight loss drugs, raising hopes that pills could significantly expand the obesity treatment market. Novo said that sales of its newly launched Wegovy pill came in at roughly double expectations, while Lilly recently raised profit guidance on robust demand for its obesity treatment.
All right, moving on then. And ET Now's Anurag Joshi caught up with Telangana IT Minister along the sidelines of NASSCOM GCC Summit 2026 in Mumbai. The minister says the state government aims to create 1 lakh jobs this year in GCC sector. Let's go across and listen into that.
We host 350 plus GCCs right now here. And last year itself, we could able to garner about 70 GCCs. And this year, we have put a target of inviting 100 GCCs to our state of Telangana. Over the past 2 years itself, in the GCCs and all, about we could able to really do it about 50 to 60,000 jobs.
Okay.
That's a huge number.
It's, right.
And this year, when we are targeting 100, at least 1,000 people, if they do it, it will be 1 lakh.
New jobs.
Yeah, we are hoping that.
Okay.
In few of the GCCs, it may be 500 or 300 or 200. But on average, we want to create that sort of a employment creation.
Okay. Right. Microsoft has its global center around Hyderabad. Now, are there other big tech corporations, which are likely to, set up their global centers, set up their hubs in Hyderabad and in Telangana? Can we see more action over there?
There are $3 trillion companies which are there, like Microsoft, Nvidia, and all those things. Right now, most of the companies are there. If you take any big IT company, their presence is already there. Few are 15-year-old, few are 16-year-old. They started in 2008. Later, in 2011, 12, phase-wise, many companies are there. Almost 99.9% of the big IT industry captains are there in Hyderabad. So we would like to really explore if somebody is missing, we would like to make an penchant try to come over there and put the GCCs over there.
Right. But can we see more updates? Can we hear more on the space in the coming months? I mean, another big tech corporation coming and setting up shop in around Hyderabad in Telangana.
Hopefully, definitely will be done.
Yeah.
And as couple of days from now, Narendra Modi ji is coming. Hopefully, he'll declare something for Telangana on the government front. And we would like to really invite any other partner who would come and sail with us, invest in us, try to be co-partners with us.
And moving on then, if the West Asian crisis gets prolonged further, it will have an impact on the overall supply chain and car supplies. That's the word that's coming in from BMW Group President and CEO Hardeep Singh Brar. In an exclusive conversation with ET Now, he also spoke on the impact of India-EU FTA on luxury car market in India. Listen into this exclusive conversation.
Could you please shed more light on it? As you know, we are importing a lot of cars from. In our case, we are importing cars from Germany to India, and 5% of our cars are fully imported. Now, in these cars, the import duty is 110%. With the EU FTA, these duties will come down to 40% for first year. For the ICE vehicles, the electric vehicles will come into play from the 6th year onwards. So once the duty comes down from 110 to 40%, you can imagine the cars which are 2 crore plus, there the duty will definitely, the overall price will come down. We are still figuring out what will be the real impact, but we are still waiting for the FTA to finalize that, because there is another element of quota, that how many cars you can really import. So once we get a quota clarity and the pricing structure, we will be able to clearly tell how much will be the net benefit to the customers. And it is likely to come by end of 27 or beginning of 2028. So still some time away, but definitely a step in the right direction.
And what is your expansion plan, especially in the context of India-US trade deal?
So our expansion plan is in any case continuing, because the import component, which is 100% imported car, they're just 5% of our portfolio. So we expect this 5% to become 10%, but in overall scheme of things, when we are selling 20,000 cars, our expansion plan in any case are continuing. Just that these fans will be able to get cars which they really want to enjoy. For example, we have a lot of performance cars which we are not able to get in India. I think with this FTA, we'll be able to get a lot more the variety of cars from Europe.
Okay, one last question before I let you go. Can you give us a sense of the impact of the West Asia crisis on BMW, especially on the industry as a whole?
See, as of now, things are under control because our lead times are almost 6 months, so we keep inventory of 2 to 3 months with us. The kits, what I mean to say, but if this gets delayed further, for example, we already have some cars which are stuck on the way, some raw material as well, and if it gets further extended, that will definitely have impact on the overall supply chain and the supplies of the cars. So as of now, sorted, but another 3 to 4 weeks, if it gets extended, it will have definitely impact on our overall supply chain.
All right, and echoing BMW CEO's Barra's sentiment, Airbus India MD and President Jürgen Westmere says that FTA will create new opportunities for industries. He also shared his insights on a study regarding EU companies' eagerness to expand in India. Let's listen into this conversation with ET Now's Prakash Priyadarshi.
It is really great that we have now the EU FTA trade agreement in the final phase of ratification. It will be very beneficial because these two economies are very complementary, and the 2 billion people it addresses, the 24 trillion US dollar it addresses, it will create win-win situation, and it will increase business and success on both sides.
All right, let's move on and get you all the cues you need to keep on your radar before the start of the street. And for that, my colleague Karan is joining us with all the stocks that will be in focus in today's trading session. Karan, take it away.
Let's start off with the Q4 earnings of Thermax. The company has reported a strong set of numbers with revenue, EBITDA and profit after tax surpassing the street estimates. While the revenue is up 12.5% at 3,400 crores, the EBITDA has surged by more than 25%. The company's quarterly revenue is at a 13-quarter high level, and the company has delivered a strong beat on the margins and the profitability. On that note, the company's order book stands north of around 13,600 crores, and that is up 27% on a year-on-year basis. And that comes to a book-to-bill of 1.2 times the company's 12-month revenue. Followed by Westlife. While the revenue is slightly ahead of the estimates, the same-store sales growth is at 1.5% year-on-year. Moreover, the EBITDA and the margins were aided by a gross margin expansion, and the company is looking to add 150 stores in FY27. Global Spirits, while the revenue is down 3.5% at 600 crores, the EBITDA has surged by more than 72% at 66 crores. The margins hold up fairly well sequentially despite the top line shrink. Followed by Pidilite Industries, revenue is slightly above the estimates, wherein the EBITDA has surged by more than 32% at 800 crores. The EBITDA margins have expanded by more than 300 basis points, and the margins were largely aided by a lower input cost and the employee cost. Followed by Prudent Corporate, the revenue is up 27% at 360 crores, and the EBITDA is up 36% at 93 crores. Moreover, the company has reported the best margins in the past 12 quarters, and the profitability is above the street expectations. And finally, we have Vijaya Diagnostics in focus. The EBITDA margins have expanded by more than 300 basis points, and the profit has increased by 38%, and it stood at 48 crores. Moreover, the company has reported its best ever quarterly revenue with a 27% growth year on year.
All right, thank you so much, Karan, for getting us all those details. But that's not it. Let me take it across to my colleague Darshita, who's standing by with more list of stocks to be watched out today. Over to you, Darshita.
Good morning. Welcome to the Corporate Buzz. Here are the few stock-specific triggers to watch out for today. Starting off with Pace Digitech, the stock could be in focus after the company secured a massive 702 crore order from Damodar Valley Corporation for a battery energy storage system project in Jharkhand. The order includes supply of EPC execution and a 12-year O&M contract providing long-term revenue visibility. Meanwhile, a few stocks may see pressure due to lock-in expiries. Orkla India sees nearly 63% lock-in ending today, with Lenskart Solutions of about 60% and MV Photovoltaic Power of about 1%. These expiries are important because they can increase the tradable supply in the market. Moving on, Deep Industries has secured a 30-month contract extension from Antelope Selen Energy for integrated drilling services with a deal value at around 78 crore rupees. Cochin Shipyard is also in focus after the company secured an order worth rupees 100 to 250 crores from Ocean Sparkle to build 4 ASD tugs. On the infra side, PNC Infratech has emerged as L1 bidder for a Lucknow flyover project worth rupees 194 crore rupees. And finally, Wakefit Innovation has approved amendments to expand into new segments, including home appliances, paints, chemicals, building materials, and textiles, which is subject to shareholder approval. So overall, strong order inflow and business execution announcements are likely to keep the stock into focus today, and expiry trades will keep the stocks firmly on radar for the today's trade.
Let's move on then. Tata Trusts board meeting is all set to be held today after Bombay High Court declined a petition seeking a stay on it. And Anurag Joshi is now joining us with more on that story. Let's listen in.
Tata Trust is scheduled to hold a key board meeting on Friday. This meeting is coming on the heels of recent upheaval in various Tata Trusts that have seen some of the key members in smaller trusts exiting from their positions following disputes and also legal challenges. The key matter, the agenda before the Tata Trusts at the board meeting will be two. First will be the listing issue of Tata Sons, in which the trust owns a 66% equity stake, and second, to discuss about the reappointment of N. Chandrasekaran as the chairman of Tata Sons for a third term starting February 2027. Tata Trusts have a voting right in Tata Sons. And this meeting, which is happening on Friday, could possibly discuss Chandrasekaran's reappointment. This meeting is also happening amid recent disputes where just a few days back in Tata Education and Development Trust, two trustees, Venu Srinivasan and Vijay Singh. Venu Srinivasan is an industrialist. Vijay Singh is a former defense secretary. They exited the trust after a fellow trustee, Mehli Mistry, voted against their reappointment. And in fact, just in April, in Bhai Hirabai Trust, Venu Srinivasan exited after Mehli Mistry had filed an affidavit before the charity commissioner saying that the trustees have to be of Zoroastrian faith. Following that, Bhai Hirabai trustees now have initiated moves to amend the trust deed that seek to appoint non-Zoroastrians and keep non-Zoroastrians as members and formalize the whole process of non-Zoroastrians being members of the trust. So the outcome of this trust will be very crucial, and it remains to be seen.
All right, let's move on then. Banking major SBI is an earnings candidate that is set to report its Q4 earnings, and this time round the asset quality is expected to improve on a sequential basis. For more on that, my colleague Mithali is joining us with what the street is penciling in for SBI. Let's take a look.
Right, talking about State Bank of India, so the company is expected to report a strong and steady Q4 results for FY26, driven by strong loan growth at around 13 to 15% for Q4, driven by continued momentum seen in the corporate as well as the MSME lending. Talking about their net interest income, that portion is expected to rise around 9% yearly, while if you see their NIMs, they're expected to be holding around crucial at 3%, despite the yield repricing pressures, supported partly by the stable cost of funds for the company. The asset quality, that portion is expected to improve for Q4, with GNPA seen declining to 1.49%, while NPA, the net NPA should be around 0.35%, while if you see their credit costs, they are likely to remain benign below 40 basis points. However, profitability, that part could moderate a bit sequentially. The profit after tax, that estimates are around 1,800 odd crores, down nearly 10% quarterly, largely because Q3 has had a one-off boost from the 2,200 crores of dividend received from SBI Mutual Fund income and also stronger treasury gains. The ROA, it is expected to remain healthy at around 1.1%, while the operating leverage and tighter cost of control should keep the cost to income ratio below 50% mark. Key monitorables for the street for Q4 26 results will be the growth guidance for FY27, commentary on the NIM's trajectory, corporate loan repricing discipline, market share aspirations, and also if there is any impact due to the West Asia crisis on the borrower stress as well as the overseas exposure.
All right, with that, we're completely timed out on this edition of Market Cafe. But before we leave you, let's take a look at what the Nifty's implied start suggests. Well, a gap down start is what it is suggesting. A cut of almost 125 odd points. And remember, even the Asian markets are trading in the red. We did see a bit of an uptick coming in on the oil prices on the back of the fire exchange at the Strait of Hormuz. And on the back of that, we do see cuts coming across Wall Street. The Asian handover is weak, and therefore the implied start to Nifty is also showing a gap down start of 125 odd points. But with that, it's a wrap on this edition of Market Cafe. I'll take a leave. Thank you so much for tuning in.